Alright, so I decided to create a separate video for supply and demand because I believe that it has a lot more than the order blocks. So I am going to discuss all six types of demand and supplies that actually exist in the markets and that we trade. So the thing is, what is a supply and demand? Now, like first of all, we need to understand the theory behind these. Supply and demand is more than essentially speaking. Let's just say that we are going somewhere and we see something of sort on the left. Okay. And that demand, that supply in this case is going to result in a reversal. Like this is in general the definition of supply. It doesn't matter if it's either of these, any of these. And similarly would be the case for your demands. If the price is coming down, right? Anything on the left that could potentially give us a reversal in the market structure, that would be demand. Now, this is the theory behind this, okay? Now I'm going to discuss all five, six of these different types of supply and demand so that you can incorporate them within your trading and potentially get better setups and make more accurate decisions. So, first things first, we have support and resistance. It's very simple, okay? Like, it's very, very simple. Support and resistance are like, let's just say that price is ranging and it's bouncing off of a certain zone, a certain level again and again. Okay. And then we have this. Okay. So in this case, we have price bouncing from a certain zone, a certain level, in this case, 158,000 to 155,000. So in this case, when we have a certain region, a certain zone, a certain point where price is continuously bouncing up from and taking buyers are coming in, they get into the market, they push the price up. This region becomes a support. So we can have multiple taps again, again, like this. And this becomes a support that this region of price is holding. Buyers are coming in and they're pushing the price up. So it becomes a support. Pretty simple stuff. And vice versa for the supply or actually the resistance. And in that case, whenever price goes there, it sells off. Goes there twice, sells off. Third time, fourth time. So that region becomes a supply or becomes a resistance. Again, it is supply, but in this context, it becomes resistance. So it's more than likely a zone. It's not a simple line. It's not a simple one price point. It's actually a zone of a some price range, right? It's a range within that is called a supply, and same goes for the supports as well. So it's like a box or a zone. So hopefully that you guys have seen this a lot of times in your like day trading or however you guys have been trading. You know what support and resistances are. If price is holding a certain level, it's a support. If it's rejecting from a certain zone, a certain region, that becomes a resistance. So this is pretty simple stuff. The second is trend lines. So you know how we have trend lines, right? And whenever price is like, let's just say this, we had a trend line and we have been holding support over here, right? Support as in price is continuously bouncing up from these trend lines. So this also becomes a demand because why? Because price is bouncing off of these levels. It's not horizontal like support, but it's diagonal. The price is going up, it's trending, but it's still holding these taps of the trend line. So it becomes a resistance. Sorry, it becomes a support. And when we break this, right, this, this trend line's retest will become a resistance now. And then we start going down. And in this case, we also have another trend line. Now, see, this one starts acting as resistance or supply. So, hopefully you guys like get this point. It's pretty simple. As the trend line is going bullish, we will hold support on the taps. And if we are downtrending, the trend lines will become resistance. It's like pretty simple. Okay. Then we have order blocks. So order blocks, I will actually teach all of that in the charts. I have given you the basic theory of support and resistance. I'll show you all of these things on the charts now. So let's go. Let's first see what order blocks are. Okay. So the definition of order block that is mainly taught is the fact that the last bearish candle, the last bearish candle before an up move, for example, this candle. Okay, so this is a bearish candle. Oops, right, yeah. So in this case, this is the bearish candle. So the last bearish candle before an up move is called an order block. But as I've told you before, order blocks are what? They are simple zones, and that is what makes supply and demand. These are zones because, as you can see, that I have marked these, right? Actually, it goes from this to this. So I have marked this region, and similarly, but one more thing, like one more thing. Not all like not order blocks are not like you just have to take the last candle. You just have to take the opposite colored candles. In this case, that would be a down candle, so that's a red candle before the up move, right? So we had a bit of consolidation here. So we can take this whole thing as an order block. Because why? Because this was a bearish candle before an up move. So technically last bearish candle before an up move. This is what an order block is in general. And same thing we have over here. The last bearish candle, in this case, it was like a couple of candles, but again, this in this case, this would be the order block, the last order block, right? So this is the last bearish candle before we broke price up. So this is another order block. Same thing goes again and again. And in this case, before we broke up, this was our last bearish candle. And we have another order block. And similarly, did we break above? Yeah, it's like the last bearish candle before an up move. So again, it's an order block. And when we have supplies, when we are talking about, so these are bullish order blocks, right? And in case of bearish examples, we will have the last up candle before a down move. So in this case, we have this one. This was the last up candle before a down move. So this is also an order block. Then we have this. This also becomes an order block, the bearish order blocks. And then we had this move down, came back up. So this becomes an order block. Then we had this move, went back up. Technically, this is also an order block. Or you could sometimes take a whole region if the order block is small. I'm not going to get into the nitty gritties of the order blocks because in the GTS, we don't use order blocks like that. And I'll show you why in a second. But another thing, again, the same order block, last bullish candle before the down move. And you can also say that these smaller points like this, and these are also order blocks. It doesn't really have to be at the end of the zone, like how people have taught this. Like the order blocks is no, the order block is down here in case of a bullish trend. No, an order block is generally just a zone where price has previously traded, bulls and bears were present. So this is all order blocks. And what have I taught you guys before is that order blocks are simply zones on the lower time frames. You see this big ass zone, this zone, it looks pretty good on the daily, right? But if I switch to weekly, you will notice that this is just last bearish candle before the up move. Last bearish candle. So this is now an order block. But if we zoom into it on the 4 hour, we will have shit ton of price action. And this just becomes a zone then. This is why I have taught in the way that zones are order blocks. If you look deep into them, all of these zones that we have marked on the daily time frame, they become our order blocks on a higher time frame. And similar would be the case that if I mark, let's say, let's just show you that you see this also becomes an order block again. Oh, sorry, a zone. And this is again a zone, a zone. Now, this is also a zone if you just drag it over here or maybe from here. All of it is just a zone. And this order block, it becomes a zone. This order block, it's a zone. This order block, it's a zone. This order block, again, it's like repetitive for me now, but in general, order blocks are just zones on the lower time frames. And since it's fractal, it's always going to be a zone on the lower time frame. So in case if I say, hey, this is an order block, right, from this candle, if you see something like a doji or like a small candle, you can take the previous candle. It's like pretty intuitive. Well, honestly, you can just spot them, but we don't really care about order blocks. So in this case, if I mark this 4 hour order block, you already can see that this is just a zone. If I go to a 30-minute time frame, we will have a complete zone, which is this. See, it's a zone. So don't bother about order blocks that much. It's just a zone on the lower time frames. We don't have to worry about that. Now, there is one more thing that I have to teach you guys before I go on to the next one. That is the breaker block. Now, what is a breaker block? Let's say that price is going like this, okay? And technically speaking, this is a zone, right? This is a zone. But price pierces through it, right? It pierces through it. It doesn't hold. This particular zone doesn't hold. And when price comes back, it tends to become a breaker and price reacts to it. Let me actually do it like this to make it pretty simple. So we had a uptrend, and somewhere over here, since this was the last zone, last bullish, last bearish leg, last bearish candle before we had a move up from here to here, and when price came back down, so it's also an OG. It's like an OG. It's like a zone. Anything over here, the last zone that was responsible for this move after breaking structure. When price comes down, since it's like if we are looking on the higher time frames, it's just going to be an order block. But again, us as GTS traders, we just talk about zones. Nonetheless, it's the same thing. You could call it the OG, you could call it a zone, you could call it an order block. These are the same things. Don't have to be confused about it. Nonetheless, this zone fails. Now we break through it. violently. And when price comes back to retest this, it gives a certain reaction from this zone. So let's say that this is a candle over here, it's an order block. Now, what we do is that we take the failed zone, failed order block, and we extend it to the right. Okay, we extend it to the right. This becomes a breaker block. This is all you need to know about the breakers. I'm not going to teach you how to trade them. This is not an ICT class. We don't fucking care about order blocks or breakers. It's just that these sometimes act as supply and demands. I'm not asking you to put a short order over here and try to trade them. No, this is not what this video is going to be about. It's just giving you an example, or just teaching you how many kinds of supply and demands we have. How to trade them, that's going to be another video. We don't have to worry about that for now. So, this is kind of a breaker, and this is how the price would sometimes react to it. Sometimes it could like go a little bit above and then fall, but again, this does work sometimes. So, I have a lot of examples to show, and let's go and I'll show it to them like right now. So, the first example I have is right here. So this was what? This was the last candle before an up move, and then we came down. And what does this become? It becomes a breaker. Now, first things first, we closed below over here on this leg. This was not a closure. We have to close below this. And then what you see, price comes back up over here and it rejects off of this breaker. This becomes a breaker, okay? It just rejects off of it. I am not saying that we are going to fall off the cliff after that. The first tap will sometimes give the reaction. Again, I'm not showing you how to trade at first. You just have to understand how it sometimes becomes a sort of a supply. First, it was demand, but the failed demand now has become a supply. And similarly, over here, now where do we have a massive drop? No closure. Okay, so here we have it. Let me actually go to the 4 hour. So we were making higher highs, right? Technically high, low. Again, not really a violent closure below this. And then a small high, and then a closure below this. Now, see what happens. This last zone, this last order block becomes what? When price comes back and it rejects from here. So, this is just how supplies or demands are going to work. There are tons of examples of this. Again, we are eyeing actually this breaker as well to some sort of give us some sort of a supply from here. Now, this is a breaker as well. This is also a breaker block, but on the lower time frames. Like, see this. This is a wick, but if I go to the 1 hour, it's definitely going to be some sort of a breaker block. And you see how price comes there and then falls off. And similarly, comes there, retests it again, but this time it's not actually a glitch, not a breaker. But hey, if you have an overlapping breaker, this also becomes a resistance or a support, which I'll go into in a second as well. So hopefully you guys understand how breakers and order blocks technically work, and I'm going to show you the how to create support and resistances as well, and then we will go into the um, last two the hidden supply and demand, as well as the volume profile. So, first things first, let's talk about support and resistance. I've told you what the support and resistance are. We just have to find different regions of taps from where market has consistently bounced from. So all you have to do is just zoom a little bit out and see where what is the region where the price has been sustainably bouncing again and again. So this time I'm just going to in this way. So this is not going to be crystal clear, but this particular region, just this region. So we first had this a resistance, first thing to tap, and then we flipped it, right? So the concept of flipping works as well, basically stating that if price is rejecting off of some level, and once it breaks it, okay, so once it breaks it, this resistance is flipped now, and it now becomes a support. And it goes from the same thing like the example of the breaker as well. So breaker, first it was a bullish order block, right? It was a bullish zone, but since it failed, what was it? It was kind of a demand. But when demand fails, it becomes supply, because that level becomes supply. So in this case, this is a supply, it's a resistance. When this resistance fails and once we retest it, it now becomes a demand, because the people that were selling here first now flip to buying this level, because now it just becomes demand. And once we retest this, we can multiple times retest it, and this will just become, this is what we call as support resistance flip, or demand or supply flip, whatever you want to call it. It's just a general sentiment in the market, like when a level is broken, once it was acting as a resistance, it then becomes support, and vice versa. So in this case, we had this resistance, then we broke it, and now we have held it as support. First tap, second tap gives us some sort of a bounce, right? And then we drop to where? Somewhere before where we also held support before, or somewhere where it was actually demand there. Now in our case this is just a zone, but if we can draw some sort of a line, it also becomes a support. Like it was a zone first, but if we draw a line, it becomes support. So we bounce from here. Now again, this sometimes, actually this is just going to be a supply, this is going to be an order block, or whatever you want to call it. Don't really give it a lot of thoughts. Again, it's not that important for us. Just see where price has bounced or rejected from a couple of times. You can call it support or resistance or demand or supply. It's pretty simple stuff. It's not that hard. It's not worried. All you just have to need to do is, when I'm going to teach you a strategy out of this, how to actually trade these regions, you will learn what I'm trying to say. So again, we have had the most bounces from this particular region, and we have the same thing over here. One, two, three, four. VIX can be there, but as long as there is no body closures below these levels, they hold. We can VIC, we can deviate, we can do whatever the fuck we want. But support and resistances are meaningful until or unless there is a closure, and then hold or break them. Okay? Similar would be the case in this point. So you can see that we have actually held this particular region on Bitcoin for multiple times. One, two, three, four, five, six. And on the seventh time, we actually broke it. And then we rejected from it as well. And then we held it again and then just flew past it. But these are the kind of levels or support or resistances that we can actually utilize in our trading. How to utilize it, I'll teach it. Just be patient. And same thing goes over here. Not actually this. You will see that, oh, it's actually, yeah. one tap, two tap, three tap, some sort of a resistance, but in this case, it was just a zone, it was an order block, whatever you want to call it. Again, so same thing is also doable on the lower time frames. So if I get rid of all of that, I will have new support and resistance levels around here. Now, this is also a breaker, and this is also a support level because there has been multiple touches. And similarly would be this, sorry, this is a resistance level. And this is going to be a same thing for resistance. Again, one tap, failed, tested. This was also a breaker, and now this becomes a resistance. Again, it's unnecessary, honestly. But as traders, we need to know a few things so that we can utilize them. Same thing, resistance. One tap, two tap, support, holding support. It's like a demand. For us, it's just a glitch, but who cares, bruh? The retail trades like this. I'm not going to tell you to fucking long this or short this. That's not the reason behind teaching you all this. Just be patient for a couple of modules and I'll give you guys a fucking A plus strat, trust me. So it's like pretty simple stuff, man. I can't fucking do this again and again. Support resistance is done, breakers done, order blocks done, everything is done. Now we talk about the trend lines again. What is a trend line? Trend line drawn. We just need 2 points to draw a trend line, and then we can extend it, right? So once we have 2 points, we can draw a trend line. The third time it taps, it falls. Fourth time doesn't come near. Fifth time doesn't come near. Fifth time taps again. Fourth time taps again, falls again, and this time it's now rejecting off of it. Now there are also deviations. Be um, remember that there are also deviations. Deviations are also there, so it's not like it's going to be, it's like not like a breakout, but sometimes you could potentially see a breakout and then price just rejects off of that. So this is also an important stuff, but nonetheless, I hope you guys understand what and how these things act as supply and demand. And this is an example of bearish case, but if I invert the scale, you will definitely see this like bullish case. One, two tap, we have a trend line. Third tap, demand was there. Fourth tap came close, demand was there. Fifth tap, sixth tap, demand was there. Tapped, we flew. So this is how the these are going to work. Trend lines are going to work. And yeah. Now the fifth thing that we have is volume profile. Now volume profile actually acts as a sort of like a hidden demand or supply. A hidden demand or supply. How? Let's go to the 4 hour first. And I'm going to show you a very neat trick that I sometimes use for bigger zones to identify where exactly price is going to come into, is likely to come into. Okay? So you see, this is a zone, obviously, right? This is a zone. And in our case, we tend to do what? Let's just say that this is a glitch versus zone. It's a glitch, whatever you want to call it. And we want to short it, or we want to long it from the 50% level. Okay. But if I use, oh, actually, it's like, wait a second. Okay. So we want to short it. And instead of entering from 50%, I want to find more better entries. Since it's a zone, what I'm waiting for price to come into it. I'm not going to short it directly. Waiting for the price to come into it. Give me a market structure shift so that I can get involved in here, minimize my SL, and target this. Okay? This is the simplest way of trading the GTS. Now, instead of waiting and finding out when it does, I can also use I can extend this to the left, a little bit of left, because it's not that not that much. But in our case, the zone is just this, not that. So what I'm going to do is I'm going to go here in the Fibonacci section. Sorry, not the Fibonacci section. In the forecasting tool, I'm going to go into the volume based things, and I'm going to use the fixed range volume profile. Now, I'm going to choose the start of the zone. Now, be very careful that we just need the zone or where the price has actually traded within. We just need that, not from here, because this is not the zone we are currently talking about. We are talking about this particular price action and this zone. So we are going to take the price, we are going to start from there and exit or choose where the zone got broken. So in this case, this was the leg that broke it. And then I'm going to place the volume profile. And what it's going to do, it's going to give me the area where the price has traded the most. This is what the volume profile is. It gives us a certain type of a hidden demand. Like, hey, this is where this price point is where the price has actually traded the most. This is where the most volume is. So whenever we get this, price is likely to reach up to a little bit above than the 50% and reject actually from here. And again, then we will look for the point like this market structure shift. But in this case, this is how I'm going to plot this. Now, this is just, we are just waiting for this, but I'll show it to you on a smaller another zone, right? So we haven't really had the chance of getting taps of these zones, but this is also a zone. And what I'm going to do is going to do from the low to the high until this breaks. Okay, so from this to this, and we have another volume profile. So this is where the most volume was traded. So this particular region, this point, is going to be a hidden demand in this zone. Okay, same case. Well, actually, first let me show you how to the settings of this. Okay, so I have it a little bit colored, but what you guys need is basically the volume profile. Values don't really matter. I have VAH, VAL, developing POC, developing VA turned off. I don't fucking care about that. All I care about is the point of control, the POC line. And this is what you should have as well. I only need the POC line within the zones. Okay. So going back, we had this was another zone. Oh, was this a zone? Sorry. This was the zone, right? Where did we break it? Over here. And what I'm going to do is I'm going to pull my volume profile until it breaks, and we will have our point of control around here. So this is a good example. And as you can see, price actually came right into it. So instead of entering 50%, I mean, 50% also gave us the tap. But this also becomes some sort of like a hidden demand or a hidden supply in this case. So yeah, this also works pretty well when I'm looking for hidden demands or supplies. And I'm going to show it to you in the previous data of how it's kind of worked. So we have this region, complete region. Okay, so this is a complete gold thing. I'm pretty sure the point of control on this is going to be within this level. I believe so, or maybe something around here. But let's see. So from the high until the point we break it, exactly around 50%. So this was also a demand within this. Okay, And if I see this zone, like no, no, not that, not that. This. Mm, price action has been fucking choppy on this. Hmm. So basically, if you just put it on every zone, you can find multiple hidden levels within the zone and not really care about the 50%. It's like a pretty small zone, honestly. This is a good zone, this one. So from the low until the point it breaks, we have this. Let's see what we do there. Hmm, nothing much. In this case, we had this zone until we broke it over here. Rah. Weird stuff. And I'm going to also show it to you on gold as well because it really works very well on gold. Let's switch to 5 minutes. So let's say that you guys have this zone and are waiting to enter on the 50% of it. Okay, waiting to enter on the 50%. What you can actually do is put this to this, and you will now have a demand level that you'll know that instead of entering the zero point 0.5 you can actually wait for this, but don't do that. It's not that simple. You will most of the times miss a lot of entries. I'm just showing it to you that what are the ways that we can actually utilize it, because again, this is the another glitch within that. So in this case, now see this, we have a zone and we have a glitch, and on the glitch we know that this is the zone point of control, right? Zone POC. This is where the most volume has been traded. And if I do this to this, you will see I have another demand zone. Now I can use these 2 points and utilize them as demand zones. I'm just getting a bit ahead of myself in this case, but which I shouldn't as well. So let's just leave this for now. So what is the theory behind using the point of controls and the volume profiles? Well, put them on your zones. In this case as well, let's see. Let's just do it from this low to this level. So this one pretty much failed because this was the point of control. It was literally at 50%. And what about, oopsie. What about over here? From the low to the high. Well, actually, put it from the low to the high, not until the point where it breaks. I think that's what I'm mistaking. From the low to the high, because that is what our zone is. So in this case, we will have supply around here within this complete zone, complete glitch. Okay. And if I go to the previous things, so we had like this is just a 2 candle zone, so it's not really necessary. But look at this one, this one. Actually, it was from here, from here. And now when I put the point of control from the low to the high, sorry, from the high to the low in this case. So the point of control was a bit above than our zero point 0.5 entry. So we don't really care about that. But again, this is just some kind of like use it for the higher time frames, because lower time frames don't really matter a lot in case of POC, because if your POC is below or above the zero point 0.5 in case you're longing and shorting, so it just like wrecks the purpose because we are still going to enter off the zero point 0.5. But nonetheless, this is going to be it for the levels of supply and demand. I'm hopeful that you guys know how all these 5 things work together. There is also a hidden supply and demand, but I'm not going to teach right now because it's just going to wreck your brains and your trading style because it's not really based on the GTS, it's something else. So let's just leave that, just stick to the five things that I've taught right now. So I'm going to see you in the next lecture now, and we will discuss the IRL and the ERL. It's a concept by ICT, and I really think it's the best thing, or only the best thing, what ICT has given us. So see you then, and I'll teach you how to understand the bias with 80 to 90% accuracy. You can have the best bias, daily bias, weekly bias, whatever you want to call it. So it's pretty simple. See you in the next lecture.